As the world of cryptocurrency continues to evolve with volatility at its core, the Pi network finds itself at a critical juncture. What was once hailed as an innovative and community-driven project is now facing mounting pressure from multiple fronts. The price of Pi Coin, the platform's native token, is on the edge of a steep decline, stirring anxiety among its holders and investors. This downturn arrives just before a massive token unlock event that could fundamentally shift the token's dynamics in the open market. In recent days, Pi Coin has been treading dangerously close to its all-time low, trading around $0.498. While broader cryptocurrency markets have shown signs of life, Pi Coin appears isolated from the optimism. The token has shed more than 10% of its value in just the past week alone, and there's little indication that a recovery is imminent. Market participants are watching closely as a massive token unlock looms, threatening to unleash significant downward pressure on an already fragile asset. The coming days will be pivotal. Beginning on July 4th, a scheduled 30-day release will see a staggering 304.7 million Pi coins enter circulation. The first and largest installment of this release, worth approximately $10 million, will hit the market immediately, raising fears of a substantial sell-off. This initial release alone is enough to rattle the nerves of any investor, especially in an environment where Pi Coin's price action is already showing signs of collapse. While some of the largest holders, often referred to as whales, have been observed moving their assets into self-custody wallets, suggesting a potential long-term holding strategy, on-chain data tells a more troubling story. A recent net inflow of over 6 million tokens into centralized exchanges paints a clear picture. A sizable segment of holders may be gearing up to sell as the unlock unfolds. These moves often precede a wave of liquidations and suggest that many are not optimistic about the coin's short-term prospects. The technical outlook for Pi Coin offers little reassurance. Chart analysts have identified a bearish flag pattern, often a precursor to further declines. The flagpole, which formed after a steep drop from 66 cents to 47 cents in late June, has transitioned into a fragile ascending channel. This relief rally, while mildly encouraging at a glance, may only be a pause before another sharp move downward. If the price breaks below the lower boundary of the flag, analysts estimate a potential fall of around 28%, which could drag the token all the way down to the $0.351 level. This would bring Pi Coin dangerously close to its historical low of $0.401, a level not seen since April. Adding further weight to the bearish thesis, momentum indicators like the Relative Strength Index, RSI, and Chaikin Money Flow, CMF, have been slipping. Both metrics are approaching critical support zones, and a breach below those thresholds would confirm that selling pressure is intensifying across multiple exchanges. What's particularly unsettling is Pi Coin's growing decoupling from Bitcoin. Traditionally, most altcoins tend to follow Bitcoin's lead, especially during bullish market phases. However, Pi has failed to mirror Bitcoin's recent upward movement. In fact, the correlation between Pi Coin and Bitcoin has dropped to a meager 0.07, signaling a sharp disconnect. This divergence has only fueled doubts about Pi's ability to rebound, even if the broader market continues to perform well. Such a low correlation is alarming because it suggests that Pi Coin is being driven more by internal pressures, like token unlocks and shifting sentiment, than by macro crypto trends. Investors typically find comfort when smaller tokens align with the momentum of market leaders like Bitcoin. When that connection breaks, confidence falters, and capital tends to move elsewhere. To make matters worse, the CMF is beginning to dip below the zero line, a telltale sign that outflows are outpacing inflows and that traders are pulling back. At the moment, Pi Coin is perched just above a crucial support level at $0.493. Should it lose this footing, a sharp descent toward the 45 cents mark is highly likely. That level, too, is seen as vulnerable if market sentiment doesn't turn around quickly or if the massive influx of newly unlocked tokens overwhelms buying interest. Still, there remains a sliver of hope. If bulls can mount a push and force the price above the $0.518 level, and sustain that move long enough to flip it into new support, then Pi coin might regain some upward momentum. A recovery of this kind would require not only increased demand but also renewed faith in the project's long-term viability. Unfortunately, there's currently little evidence to suggest such a bullish breakout is in the works. The broader sentiment remains cautious at best and skeptical at worst. Open interest figures for Pi coin have risen to $23 million, indicating that traders are still highly active and speculating on the coin's next move. But this heightened activity comes with risks. The deeper the price dips, the higher the chances of a long squeeze, where leveraged long positions are forcibly liquidated, adding even more downward pressure to the token. All things considered, Pi Network is entering one of its most uncertain phases to date. The combination of bearish technical signals, a huge supply influx, weakening investor sentiment, and a decoupling from major crypto benchmarks like Bitcoin all paint a challenging road ahead. With the market cap gradually slipping and trading volume showing signs of fatigue, the July 4th token unlock might be the spark that sets off a broader capitulation event. In the coming weeks, much will depend on how the market absorbs the unlocked tokens and whether any external factors, like positive news, unexpected partnerships, or community initiatives, can help stabilize the price. For now, however, Pi coin's path appears precariously tilted to the downside, and cautious optimism may be the most reasonable stance for those watching from the sidelines. As with any asset in the crypto space, volatility is the only constant. Pi coin still retains a loyal community and a unique mining model that could serve as a foundation for future growth. But in the short term, storm clouds are gathering, and holders should brace themselves for what could be a bumpy ride. The next few days may prove decisive in determining whether Pi Network can weather the storm, or become another cautionary tale in the ever-changing world of digital currencies. I'm not giving up, at least, not yet. But I'm watching closely, and I'm being cautious. I'm not here to sell you hype or blind hope. I'm here to stay honest, stay realistic, and try to navigate this journey with you. If you're still holding Pi like I am, I want to hear from you. Are you staying in out of hope? Habit? Or do you still see a future in this project that maybe I've lost sight of? Drop a comment and also don't forget to like, share and subscribe so you will not be left alone. Let's talk about it. Because no matter what happens, we've got to face it together, with clear eyes, honest conversations, and a willingness to admit when things aren't going as planned. In crypto, the only thing worse than losing money is lying to yourself. So let's stay real. Stay informed. And maybe, just maybe, we'll make it through this storm.